Most folks don't really care what the underlying tech is. It's a dollar. How it gets there can be boiled down to, is it fast, cheap, compliant, convenient?
Hi, this is Jeremy Allaire, and welcome to The Money Movement. Today, we're going to be doing an episode in the USDC Builder series, where I'm having conversations with builders that are really taking advantage of what we've been able to build at Circle. And I'm really, really pleased to have Arnold Lee, co-founder and CEO of Sphere, with us. Arnold, really nice to have you here.
Yeah, really great to be here and appreciate you hosting. It's an honor, genuinely.
Well, I'm looking forward to the conversation. Maybe we can start just at a high level. I'm always interested in like founder stories and when you started Sphere, like when did you and your co-founder or founders start, and like as people like to say, like there's like an itch to scratch. Like what was the itch that you wanted to scratch? Like what did you see? What was the like spark that got you really excited about building in the space you're in? And I know your product has evolved and there's a lot to everything that you guys are doing. So we'll come to that in a little bit. But just like what was that spark, and what were like the big ideas that you had that you wanted to go after that got you so inspired to start Sphere?
Yeah, it's a great question. And I founded Sphere with my best friend from college. His name is Luigi. We've been building software together for about a decade. And we both grew up on the internet. He's kind of middle from the ocean in the Caribbean. Parents originally from Guyana. Mine is originally from Korea, but I grew up in the woods outside of Boston. So the idea of digital money always made sense to both of us. Playing video games when we were young. I'll spare, you and the audience the full lore and backstory, but found Bitcoin in 2009 when I was in middle school. And parents couldn't speak English very well and wanted to play video games, World of Warcraft specifically. And the only way that I could get paid to do these online surveys was through Bitcoin. And you could, make enough Bitcoin, trade it in peer-to-peer for a gift card. So that always left an impression on me. 45 minutes bus ride to school and back, thanks to my much smarter younger brother. And was a Bitcoin user throughout the years, but it wasn't until 2015 or so when Ethereum started to really become in vogue within college circles. And the idea of a decentralized computer made a ton of sense. It was like abstractly very interesting. But it was hard to explain to our parents. Everyone has like an ICO story. And it wasn't until we found, frankly, what you guys were doing with stablecoins, where it was explainable to my mom. This is a dollar on the internet. And the initial itch, it's so much easier to just look back and kind of connect the dots. The initial itch was because we would have saved so much time if we were able to bring money from Korea to the United States. And I think it was the same for Luigi. It's like years, decades of starting over. And in 2020, we had kind of gone down different paths. I blame him for the finance and bringing us into the world of payments, because he was at a bunch of asset managers and eventually startups. I went into IoT because my family is in construction. And we started to build on chain. And we tried, for years, essentially since 2020, 2021, to create products that people wanted, since we had some background building software in Web 2, and just kept running into the same problem of payments. Eventually, this accounting labeling tool that we had made so that way international customers could pay us escalated into a global hackathon win sponsored by Stripe. And our timing was historically perfect. Incorporated a week after FTX, closed a seed round during the regional bank crisis. And that was the initial, phase of Sphere, a Stripe for crypto. And we quickly realized that no one really wanted to take crypto when crypto's down bad. And the only people willing to talk to us came from the same regions. There were different types of people, but it wasn't the teams that were still left throughout the bear market who had strong convictions on blockchain principally. It was folks from the Caribbean, Latin America, a fruit merchant, engineers from Brazil, remittance provider out of Mexico. And we just kept seeing these same threads of folks who were way more successful than we were, who weren't blockchain natives, but were incredibly excited by the idea of stablecoins as a form of cross-border payment. And we went all in. And I describe this as the second and publicly what most people recognize us for, helping folks do these cross-border B2B payments using stablecoins like USDC. So in the initial stages, it was a hard itch to maybe isolate, but looking back, it makes a lot of sense why the DNA of the company eventually ended up going down the road of payments.
Yeah, it's fascinating to hear both like the sort of things that you were excited about technically, and then obviously the sort of finding who's got the real problem, and then just like, okay, we're going to build for that, right? I think I can relate very much to like starting a journey here and then ending up over here, and there's usually a through line that kind of goes through it, but it's never a straight line, as well. I think as you know, right, because we talk about this a lot, is this idea of an internet dollar and the ability to just transact directly with people over the internet at the speed of the internet with all this cost efficiency, et cetera, is really powerful. It's what we've been chasing for 10 years, and like we're finally making progress. And I think very often people ask, what are the use cases for stablecoins? And there's lots of use cases we can point to, of course, but I think one that we're seeing more and more of, and it's one of the reasons I was really excited to have you as a guest, is international transactions, especially with like small and medium enterprises, right? And I think what's been interesting, and we're seeing more of that, and I want to hear more stories and kind of how that actually works for you guys today. But it's really interesting because we're finding, right, small and medium enterprises, especially in emerging and developing markets, they can like make decisions quickly. They depend very heavily on the internet for a lot of what they do for their business in many cases, and they don't have like giant. They're not public companies. They don't have like all the kind of risk management stuff, and so they're willing to basically be more early adopters. And that's been the case in software historically, right? Like the early adopters of SaaS were all SMEs, right? Because no big company was ever going to depend on SaaS. Or early adopters of AWS were startups, right? For the most part, right? And it wasn't big enterprises. It wasn't all these things. And so I see that we're seeing kind of product market fit with international SMEs who are like, wow, I like dollars. I want to settle with dollars. My counterparty want to settle with dollars. I'll keep money in this because this is like more convenient than my bank, and they start to do it. So we're sort of seeing that emerge. Maybe you could just tell a couple stories about, just bring it to life a little bit. Like, and obviously if you can't name specific names of customers, that's fine, but just like characterize like who's doing what, how are they doing it before, how are they doing it with Sphere, and what are they telling you?
Yeah, these are some of my favorite, I suppose, ways to motivate all of us internally. Because the decision to go on the ground in Caribbean and LATAM, especially within South America, it's visceral. To give you an example, I'm currently in San Jose, Costa Rica. One of our favorite clients is coming up from Chile. We've been working with him for about a year now, and he runs a very successful local fintech out of Chile. You would think that he would be able to get access to robust dollar accounts. The ability to move millions of dollars daily, just natively through, say, I don't know, pick your favorite big bank in the United States. But because he doesn't speak English very well, because all of his corporate documentation is in Spanish, he doesn't have any local presence in the United States. he has to depend on his local sponsor banks to be able to give him a robust dollar account. And, those sponsor banks have a degree of separation from the ultimate issuer, the correspondent in the United States. And they have to justify, to your point, from a risk management perspective, why they should give access to a higher dollar account to this merchant. There is so much structural deadweight loss that we're seeing because of how intensely manual compliance and risk is today, and it makes sense why that it is the way that it is. But for that client who's coming to San Jose and visiting us, it's incredible how difficult it was for him to get access, not just to the dollar accounts, capital markets, to be able to potentially create local presence in the United States or elsewhere, expand beyond the locally successful business that he has today. It's crazy how he didn't get very far along in conversations just because of who he is and where he comes from. And the way that that client uses us today is we're acting as a way to naturally provide tech infrastructure for stablecoins as middleware. But until the day where the entire world economy is on chain, you still need banks for the entrances and the exits. And as engineers going headfirst into this rabbit hole of fiat, we were very lucky to recruit folks with decades of experience along the way. We discovered that there are things within the bank messaging system that makes it a lot faster and cheaper because you can start to explicitly define correspondent routes. You can explicitly communicate with the people who are in the wire room and operating on these, Swift MT103s or ISO 22s. That merchant, as a result, has been able to get much more robust access to dollar accounts, which has downstream effects on the local, SMBs that he services, the individual retail users, because oftentimes capital controls makes it really difficult for folks who are not businesses to get these bank accounts. And even if you are, there is a very conservative approach, which makes it hard for these businesses to grow. And that's something that was very strange for us coming from the United States, where you're a smart young person, you can maybe go to Silicon Valley, raise around, and there's a strong culture of entrepreneurship. In many of the countries where we operate, internet adoption happened maybe 10 years later, and the initial infrastructure is still getting set up. There are many such cases where maybe your country, you just happened to be born in a country that had money laundering like 20 years ago, or a poor international credit rating from 70 years ago. And because of the circumstances of your birth, that lottery, no matter how legitimate you are, no matter how regulated you are, no matter how much you try to convince both your local authorities and the ultimate correspondents in the United States or Europe or what have you, it's really difficult to make movement. And stablecoins are a beautiful thing to help get rid of some of that deadweight loss because, to your point, it's internet money. And naturally, you want to make sure that it's fully compliant in the funds flow and how it interacts with the entrances and the exits. But some of our favorite moments throughout this journey has been actually getting to spend time with these end clients, because we get to see the physical infrastructure, the end users themselves that they help to service. Dollar exposure is maybe something that we take for granted more in the West.
Yeah. Are you finding, one of the themes that we talk about also, and we've worked on a lot is like improving essentially like the blockchain infrastructure that sits behind stablecoins to make it, better, faster, cheaper, simpler, safer, everything from like the multiple chains we deploy on, the cross-chain transfer protocol. Like we're seeing big improvements in kind of wallet architectures and stuff. So there's a lot going on. And for most people, that's like gobbledygook. They don't want to know about it. And the whole point, right, is to sort of, through apps like yours, right, just abstract that away and make it as simple as possible to make the paradigm as familiar as possible, but still getting all the kind of technology and economic benefits from that. But are there key kind of technology things or technology changes that have happened really like over the past, like say 6 months, 9 months, that are helping foster a better product for you, better user experience, better economics? And are you seeing traction from the evolving technology in the kind of stablecoin network space?
Yeah, absolutely. CCTP definitely stands out as a way to make the bridging across chains easier. I think there are a ton of really strong stablecoin, essentially money transmitters, who have been building out their backends to make the latency and the fees lower. And naturally, merchants are incredibly excited about that. I think cryptography and general privacy tooling, it's yet to hit market in a way that may be as apparent as a no-fee bridge. But the developments on the zero knowledge side, FHE side, businesses, as you go upscale, are quite concerned about their privacy, protecting the privacy of their end users. And I feel like that will be a strong theme as more, I'll call it middle market fintechs and merchants start to come on board chain. But your core point is exactly correct, which is most folks don't really care what the underlying tech is. It's a dollar. How it gets there can be boiled down to, is it fast, cheap, compliant, convenient? And I think there's a lot of extra really cool ideas ancillary to that value prop of, say, a stablecoin on chains. And hopefully there's a future where merchants start to adopt those more. But from what we've seen, at least, if you can abstract away the wallet, you can abstract away the chain, you can abstract away the on and the off ramp, even touching foreign exchange, touching liquidity, that's what makes it a no-brainer. Because it's easy to forget that if you are a company maybe out of Paraguay, your access to local developer talent, access to capital is going to be a lot lower. And so the bar for adoption is harder. It must be simpler compared to, a team of young kids out of MIT in the States.
Yeah. Are you in the Sphere products? Do you basically give people like multiple chain paths that they can choose? So like they can send and receive on different blockchain networks with USDC and stuff like that?
Yeah. So for our Web3 users, we prefer to give them the optionality. For, I'll call it Web2 2.5 users, we tend to just give them the fastest, cheapest route. And if they really want to, they can modify and explicitly, provide the chain that they'd like to settle to or settle from. But I think, less choice sometimes is good if you don't have the same, I suppose, strong opinions on where your liquidity is.
That makes sense. One of the things that I, noticed about what you guys have built is, and maybe there's a lot of history behind this, but like you've kind of like, you've added features in a lot of different areas. I kind of think of them as like verbs of like treasury management, right? So you have payments, obviously, you have, mass payouts, you have invoicing, you have a lot of different pieces. And then obviously you have the kind of fiat connections and stuff. But I'm interested to hear whether some of your customers are sort of beginning to think about like just keeping more of their value stored on chain and then actually starting to like use tools like what you've built as like, kind of actual like treasury management applications for their small business, right? Where they just keep their value there and they perform more and more of the different kinds of tasks with user roles and all that kind of stuff. Are you seeing people sort of actually starting to just adopt that and say, hey, I'm going to just stay natively on chain as a business versus like going off?
Yeah, I think that as you do more flow as a non-crypto native business and start to trust the blockchain environment more, it becomes easier to justify. Your employees start to over time become trained on how to interact with it. Hopefully there's more regulatory clarity and there's further development on privacy tooling. I'd say there are a couple of blockers before, at least that we hear, before everyone will just keep their entirety of treasury on chain, namely within privacy and compliance. But by and large, it's incredibly encouraging, just from when we began to now, how much more our merchants are sending flow through chain because proof is in pudding. You can do a default MT103, do multi-country compliance check bounce back, up to the person at each intermediary. What are the wire instructions? And there's so many fields that are left blank by default. And it takes weeks, and maybe it's 500 bips by the end, versus, USDC A to B could be 50 cents, could be 0 cents plus gas.
Yeah, I mean, now gas is like on Base and Solana and, some of these other, it's like effectively zero. Yeah.
Sorry, exactly. I'm very optimistic that we'll continue to see this movement of adoption. And, there, as you go down these rabbit holes, I'm sure you know this better than I do. These MSBs operate off of latency provided through, I'll summarize as one of my favorite sayings. You start off as a payments company, then you become a compliance and risk company, and then you realize that it's credit all the way down. And I think there's a whole world to expand on there for them as they think about hedging against currency risk, or doing more of these ops entirely programmatically on chain.
Yeah. I'd be interested too, like, two related things actually to what you were just talking about. One is, one of the things that we see with our stablecoin network is sort of there are intrinsic network effects, right? You probably chose USDC because there was like liquid and there were a lot of other wallets that support it, or, and now you have USDC and now your clients are using USDC. And again, like there's like these network effects. They're like nodes on a network. The number of nodes just sort of grows the utility of the network for everybody. And so sort of everyone wins. But I'm curious if you're seeing like network effects yourself, meaning like, hey, someone started, they had a need because there was a specific flow that they had. And then they're like, wow, this is great. I want to convince this other business that I have or this other user that I have to adopt this. And it's sort of like when email came online, right? It was sort of like some people had email, a lot of people didn't have email. Some people had a website, a lot of people didn't. Every major utility, like, even like social networks, et cetera, like it's sort of, when do you hit a critical mass where enough people have it and then the utility just really grows? But like, are you seeing like some kind of velocity happening in terms of people who are saying, oh, there's increasing utility? We're certainly seeing it, right, in the aggregate numbers of transaction volumes that are happening on chain, just keep going up and up and up. But I'm curious to see what you're seeing, because you've really built a tailored product that has that fundamental business payment utility in it.
Yeah, definitely seeing network effects. And I think it comes down to how difficult it is in the normal world to verify the quality of your counterparty, especially overseas. If you don't speak the same language, don't have any local presence, how do you know about their licensing structure, their legal structure, if they're infractions, are they properly filing XRs or equivalent? And the only way to find out in the regular world is just try and send a ton of flow through them and hope that it doesn't break. Whereas on chain, even if the onboarding requires them to learn certain components of like, hey, this is how you make a wallet, you could certainly abstract that with an automated off-ramp flow where send money to address immediately gets liquidated. I think that as people become more comfortable with just being aware of these operational flows, say a vendor who's receiving payments overseas from someone who is stablecoin forward, even if they don't feel it immediately because it shows up as dollars into their dollar account, just communicating about it and noticing that, hey, my counterparty has become so much more competitive as a result. There are natural market pressures that are, empirically seeing for at least our clients, leading more to adoption. And while, simultaneously an educational effort, and we're seeing a good degree of regional fragmentation because cultures are different, regulatory regimes are different. I think across the board, it's just insane how much cheaper and faster you can get these things through. as a not even native crypto company who's just leveraging this append-only data structure as a tool.
Yeah. Do you find that that some of your customers they increasingly know what stablecoins are and can articulate the benefits of those, and they sort of it's becoming just part of the parlance of how they operate?
Yeah. They might not know the word stablecoin specifically, but internet dollar, where there's some blockchain involved, becoming increasingly easier to have conversations about. It would be different, I think, if there weren't that huge competitive advantage in adoption. But everyone who doesn't natively have access to robust dollar accounts feels the pain of, neither being able to get easy dollar exposure or having to pay intense intermediary fees just because so much of global FX and trade is dollar denominated. And if you have to interact with an FX broker directly, or depend on an intermediary.
Bank FX, yeah, right, yeah.
So T+1 at least, and a lot of fees, and so yeah.
Maybe a little bit of a it ties into some of the earlier questions about adoption, but obviously one of the benefits of stablecoins is by existing on this kind of programmable money surface, right? People are building more and more building blocks on chain. So they're building borrowing and lending mechanisms. They're building on-chain credit models. There's a lot of stuff that's emerging, and so when you sort of think about the building blocks of corporate treasury and commercial finance and stuff that needs to get done, invoice factoring and selling the NFT for credit, or all these things and there are companies doing all of this obviously today, right? So we know a lot of these, and there's tons of companies doing this, but do you see a world, this is maybe a little bit looking out in the future and what you see, do you see a world of more and more of the value stored this way, and these businesses are, seamlessly, they don't even know it, allocating into, DeFi lending pools, or they're taking advantage of, credit markets on invoices, or this kind of stuff? Do you see more of the value and utility beyond this, the efficiency of payment throughput, right? Kind of coming in terms of what people will do with this?
Yeah. Maybe this is a bit of a hot take. I certainly see a growth in what you mentioned. I think that'll be hard to argue against. Whether it represents a high majority of total global economic activity, I feel is somewhat intractable because so much of adoption from our experiences are dependent on the demographics of a given country and the regulatory regime in that country, which are more macro things that are harder to control. I'm very optimistic that young people who are grew up on the internet and increasingly want to use digital dollars or native on-chain applications, or are eventually going to be within those agencies and running for office and setting policy. I'm very optimistic that future could happen, but it's harder to reason about when you think about how many different countries there are, each with their own culture and I suppose set of sovereign concerns. If it's super easy, as an example, as a country without a strong currency, for your citizens to get access to dollars, maybe you would want to have stricter capital controls, even if dollar-pegged economies have a history of success. So hopefully that starts to answer your question. I think it will kind of depend on the trajectory of those two factors of demographics and regulation. If there's, fingers crossed, a world where the majority of people, I suppose, are used to internet native experiences, and we see globalization stemming culturally from liberal democracies setting the tone, I'm very optimistic that more of this activity will happen natively. And what we're currently building is a way to sort of act as a connective tissue between not large corporates, not banks, but for fintechs who exist in those stricter jurisdictions, to have a fully compliant way to be able to downstream interact with these open, loop, general purpose networks.
100%. Yeah, we definitely see that as well. Like basically equipping, Web 2 fintechs with blockchain transaction monitoring and travel rule compliance and even like the basic wallet infra that's needed to deal with this and not be afraid of dealing with like the transactions and signing transactions and all the fun stuff. But I think on your point about kind of policy adaptations, right? I have a thesis, and this is sort of just from my own experience over the last 30 years building internet infrastructure, is that in many ways, like society decides, not policymakers. And policy is always responsive to society, even in a fully authoritarian regime. If there's a technology that has significant utility, and especially software-powered, that over the top of the internet, software-powered technologies, people will adopt those that give them more utility, even if it's sort of outside of the sort of defined rules that exist there. And that definitely happens. And at some point, right, if the utility is very, very high, policy will adapt. I mean, and this is the story of the internet. Like, when the internet came out, right, it was in most places, if you want to publish something, or if you wanted to say broadcast audio, it was very hard. It was mostly national monopolies, many of them government run, that could actually broadcast audio. And if you wanted a license to do that as a foreign entity, et cetera, it's impossible. But the concept that you need a license to broadcast audio is just gone. I can broadcast audio to any human on earth, basically, with probably very few exceptions. If I'm saying censored speech, I might get blocked by a great firewall. But basically, you have that. And you've had that with, what I kind of call over-the-top platforms, over-the-top content, over-the-top publishing, video, communications, peer-to-peer communications, all of these things that have kind of been these scaled out internet utilities. They're software powered, people adopt them. And they do run in the face of, kind of maybe what local laws were. Even Uber and Airbnb and these structures kind of found their way in. And then people are like, no, you're not taking this away from me. And so policy then responds and says, okay, well, we've got to deal with the risks of it, but we're not going to take it away. And so my own view is that over the long run, and I think very long term, there just are going to be fewer currencies in the world. And there will be more countries that align against a uniform kind of, they'll have to have fiscal responsibility vis-a-vis global currency monetary regimes. And like you said, there's good evidence to say that's not a bad idea. But in any case, I do think that you'll have that. And then in general, I think policy will respond to social adaptation. But I also agree with your view about generationally, some of this is different. But that also plays out in the internet space, meaning, the percentage of viewing hours of video content that is sort of online through Netflix, YouTube, compared to the percentage of viewing hours of broadcast cable, satellite, terrestrial. It's still dominated by cable, satellite, terrestrial, even though for us, right, we're that's crazy. That's insane. But it actually is. The world is still, a demographic that just depends on that infrastructure. There's a huge percent that are there. And these things take decades to change. And so even though maybe whatever it is, only 15% of the viewing hours are online, it's still massive, and it's a massive industry change. And the same thing with even e-commerce, right? E-commerce is still the minority, a significant minority of retail transactions, but it's massive and it's changed everyone's lives. And so I think about things like stablecoins, on-chain finance, all the utility that comes. It's going to be hyperscale in terms of the utility, and people will adopt it. and it will have these profound network effects. And then society, like businesses in a country or households in a country say, no, this is how we're going to do it. And like, okay, there maybe need to be some rules that are developed, but like, we're not going back. And it maybe starts out as, 2% of the activity or 5% of the activity, but even 10% of the activity is enormous, right? The TAM on legal electronic money is over $100 trillion. And then the TAM on all the like utility of moving that money around is trillions and trillions of dollars, right? So we don't need it to be everything, right? We just need it to be 10%.
Yeah, 100%. I think, on a long enough time horizon, I'm surprised but very glad that you mentioned your thesis about the centralizing force on currency. I think that is very real and is going to happen even if you don't have stablecoins. Net FDI flows, the appetite for people to increase local value and shift capital over from where it's currently sitting, that would take such a long time to play out. And it seems empirically since the 1940s, 50s, it hasn't quite achieved the fruition that people would have thought. And everyone just wants a good base unit. And there's so much that goes into what defines the dollar as the reserve. We could do like a case analysis of what are the alternatives. And I think is clearly, especially a strong argument. But yeah, I think on a long enough time horizon, you are correct, which is why we also have conviction in the decades or centuries long front. It's hard to argue against math, which is kind of what the append-only data structure boils down to.
That's awesome. So what maybe last question for you is sort of like, what's next for you guys? What are you most excited about? What are you most excited about delivering on? Kind of what do you think, maybe in the context of sort of the next 12 months, like where do you want to be?
Yeah. So our existing Sphere Pay business is going quite well. And so we're really excited to, start getting our MSB designation and building out that business. However, what we've realized is in the meantime, but before we get to a world where, more people just recognize the utility of operating on chain, there is a gap where the risk compliance teams at various companies, within countries, especially at regulated entities, they have existing mental models of what is low risk, what is medium risk, what is high risk. And it is a very hard battle. And I think, one that Circle can fight because you guys have that leverage to be able to do so. But for the fintechs that are our vendors, our clients, I think there is a unique insight that we found while doing so much manual work in coordinating between sponsor and intermediary banks that enable cross-border payments, even at the fiat level, to get cut down 10, 100, in some cases 2,000 times, which most people don't know about because most people haven't been in a wire room. And it's something that we'd love to, we'll be releasing more material about it over time. Just give folks out of the box, because there's no way, a Brazilian MSB equivalent would know the intimate details of what goes into a Fedwire spec, or who the best counterparties are in Japan. And technology here, the cryptography, is a great way to provide an immutable log of the things that are normally kept in Postgres or only exposed to independent examiners. So, yes, sir, I'd love to tell you more about it.
That's cool. You don't need to tell everyone.
Sorry.
Yeah, very, very cool, Arnold. Well, super conversation, and really pleased that you could come on the Money Movement, and we'll keep tracking your progress.
Thank you. It was really amazing convo. And yeah, it's kind of crazy to have the chance to be able to talk to you about this. I used to watch a lot of Flash. And so,
Nice.
Thank you for what you're doing at Circle. And yes, sir, love to continue staying in touch, keep you posted on what we're doing.
Absolutely.